The Q1 result season of FY26 has come to an end. Being the first result season for the new FY, it holds a lot of importance for investors. Now, by knowing what happened in Q1, you can set your expectations for the year ahead. Not just this, you can also reposition your portfolio for optimum performance. In short, the takeaways from this result season can help you stay ahead for the whole year. And that's what makes this video a must watch for both stock and fund investors. Hello and welcome to ET Money's YouTube channel. In this video, we'll analyze Q1 results. Consequently, you will get to know how listed companies performed in journal, which market cap, large, mid or small, did well and then should be your focus going forward, which sectors should be your hunting ground for promising stocks, and finally, which stocks in particular should be on your radar. Overall, you will get the complete package for a successful investing journey in FY26. Now this video belongs to our playlist on result updates. You can explore our previous updates and similar videos if you want to watch it. The link is in the description. Okay, let's start by taking a look at the overall performance of listed companies in Q1. Let's consider the BSE 500 group of companies and how they have fared. Here, we will consider non-BFSI stocks. If you are interested in quarterly performance of banks, you can watch our video on the Q1 review of the banking sector. Now, the aggregate revenue of BSE 500 stocks grew by 5.3% year-on-year in Q1. That's less than 6.5% in the previous quarter. Now, a drop in revenue growth in Q1 breaks the upward trend over the last 2 quarters. On the other hand, the profit of ex-BFSI BSE 500 companies grew by 15.5% year-on-year in Q1. Thankfully, that's higher than the previous quarter, but a bit lower than the growth in Q3 FY25. However, higher growth profit alone is not sufficient. It's also important to check whether the rise in profits is backed by better operating or core business operations. So if we check the change in the operating margin, we will see an improvement of 50 basis points year-on-year in Q1. This is the third straight quarter when the operating margins have improved, so that's good. In aggregate, while a slowdown in top-line growth in Q1 is a bit of a concern, profit growth and margin expansion are on track. Okay, let's take a look at the performance of large, mid and small caps now. But before that, here's something useful. You can now get cash to enjoy your present while staying invested for your future with loans against mutual funds on the ET Money app. The interest rate is just 10.75% per annum and there are no fixed EMIs. Pay interest monthly and repay the principal amount whenever it is convenient for you. Plus, there is no need for a CIBIL score. So go ahead, check your eligible limit on the ET Money app now. For large caps, let's use the BSE 100, for mid cap the BSE 150 mid cap, and for the small caps the BSE 250 small indices. Let's first check the revenue growth over the last few quarters. For large caps, the revenue growth has fallen after going up in the last 2 quarters year-on-year. This pattern is similar to what we saw for BSE 500. For mid caps, the revenue growth has been falling for the last 2 quarters, including Q1. It hit a peak of 9.9% in Q3 FY25. Finally, for small caps, it's a zigzag pattern. The revenue growth fell in Q3 FY25, rose in Q4, and then fell again in Q1 to 4.8%, which is below that of even large caps. Okay, let's take a look at the profit growth patterns now. Large caps have seen rising profit growth over the last 3 quarters. They have smartly recovered from a 7.5% profit degrowth in Q2 FY25 to growth of 16.1% in Q1. But mid-caps profit growth has been going downhill. In Q3, it hit a high of a massive 57%, but has then subsequently dropped to 25% and 15%. Finally, small caps registered a drop in profit growth in Q1 after good Q3 and Q4 in FY25. Like revenue growth, their profit growth has fallen behind large caps. Okay, let's also examine the change in operating margins to assess how the 3 market caps have fared in terms of core business performance. Large caps have witnessed a steady improvement in operating margins from a drop of over 200 basis points to a rise of 46 basis points. Mid-caps operating margins have also improved. However, The pace of improvement has slowed down since it hit a peak in Q3 FY25. Finally, small caps have yet to show an improvement in their operating margins, but the drop is getting lesser and lesser. It stands at just 3 basis points now. So, in aggregate, large caps seem to be the best place at the moment, mid caps come next, and the small cap segment still exhibits some pain, though recovery appears to be underway. Next, let's take a look at the sectors that have been doing well and those who have been suffering. We analyzed 20 key non-BFSI sectors in the BSE 500. Most of these sectors have exhibited mixed revenue and profit growth over the last 4 quarters. However, a few sectors do stand out in either direction. The sectors that have done quite well include hospitality, infrastructure, and telecom. These sectors have seen healthy revenue and profit growth over the last 4 quarters. The hospitality sector has benefited from strong demand, better infrastructure, supply additions, big ticket events, etc. The infrastructure sector has been a beneficiary of government's infra push. The telecom sector has been riding high on increased revenue per user, 5G rollout, AI-related demand, growing attraction for online gaming, etc. The sectors that have suffered the most are auto, gas transmission, and textile. These sectors have witnessed low to negative revenue and profit growth over the last 4 quarters, including Q1. The auto sector has faced the heat on the demand side. Gas transmission companies have suffered from volume contraction and weaker margins. Textile companies have had to grapple with costlier raw materials and weak demand. Now, you can use the list above as a focus areas for your research. Now, stocks belonging to the winning sectors can be good growth plays, and those belonging to the losing sectors can act as good value or contra bets. Okay, now let's take a look at companies that have stood out in the last 4 quarters. From the ex-BFSI BSE 500 group of companies, we selected those that have exhibited revenue and profit growth of at least 10% year-on-year in each of the last 4 quarters and whose operating margin has also expanded in each of the quarters. This gave us a list of 15 companies. There are 2 IT companies in the list, FL3I and Persistent Systems. These companies are bright spots in a sector that's going through a lean phase. 3 healthcare companies made it to the list, Apollo Hospitals, Divi's Labs, and Lupin. BLS International and Sagility are 2 business services companies. BLS manages administrative tasks for visa, passport, consular, and citizen services. Sagility is a business process management and outsourcing company that primarily serves US-based healthcare clients. FSN E-commerce and India Mart Intermeds are 2 names in the list from the retail side. TVS Motor is an outlier and has succeeded in beating the slowdown trend in the auto sector as discussed a short while ago. But do know that these stocks are not our automatic recommendations. The idea is to just highlight the winners of Q1. Now you can use this list as a starting point for further research. You can dig deeper to understand the reason for their sustained good performance and do take the prevailing valuations into account. Okay, let's also take a look at the companies whose sales growth, profit growth, and operating margins have shrunk in each of the last 4 quarters. Now, there are 7 such names in the ex-BFSI BSE 500 group of stocks. The most prominent name in the list is Asian Paints. The company's performance has suffered due to increased competition in the sector. Gujarat State Petronet belongs to the gas transmission industry, which appeared as poorly performing sector in our list. IRCON and RVNL are 2 railway infrastructure PSUs. Now you can use this list as a negative list or as a contra prospects, but don't forget to do your own research. Now, did you know that you can find the financial information and plenty of analytical data for any listed company on the ET Money app and website? Just type the name of the company you're researching in the search bar and hit enter. Okay, let's summarize the key takeaways of this video in the concluding section. In this video, we analyze the Q1 results of ex-BFSI BSE 500 companies. At an aggregate level, the drop in the sales growth in Q1 is a bit of a concern, but profit growth and margin expansion are intact. So that's good news. At the market cap level, large caps appear to be best placed. Small caps are still struggling, although their performance has shown an improvement. True to their name, mid caps lie in the middle. Among sectors, hospitality, infra and telecom should be on your radar. Auto, gas transmission and textiles have been going through a difficult phase. Now, of the 408 companies covered in this analysis, 15 companies have done quite well. 7 companies have done particularly badly. So, what's your view on the overall performance? Do let us know. And with this, I've come to the end of this video. Hope you liked it. And if you did, do share it with your friends and family. I'll be back soon with another video. Till then, take care.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.